Hey, this is Big T with another tip from Citizens National Bank on what you should do with your loans in real estate. Morning, Tim. How are you?
Morning, Terry. How are you today?
Good. I had a lady call me and say, okay, Big T, I've gotten my contract accepted. What am I supposed to do now?
Well, if they haven't been pre-approved by then, the best thing to do is start gathering all their information, set up a time to meet with their mortgage loan officer.
Now, you know, ladies and gentlemen, a pre-approval is about as worthless as toilet paper. Banks just issue them. What we're talking about here is actually getting the loan. So I've gotten a pre-approval, but with that pre-approval, you've taken the information from me verbally and issued a pre-approval subject to verification of all of that, okay?
Correct. Well, unless the borrower has gone through the steps as if they had a contract, then the pre-approval is based on verbal information. So at this point, if they don't have or have not provided your tax returns, your pay stubs, your bank statements, obviously a copy of the contract, they need to start gathering all that information.
So they need to gather their tax returns, their pay stubs, a copy of the contract, I guess any bills that they pay on a long-term basis. Is that correct?
The credit report should show everything that's out there, unless they have a loan that is not reported on the credit report, and that's part of the application.
What about savings accounts and bank accounts?
Checking, savings account, any investment account, we would need 2-month statements consecutive on those accounts.
So what do you do with that information after you collect it?
We process it. We verify that the funds are there for closing with their assets. We verify their income through their payroll, their W-2s, their taxes, and we gather it all and we get it presented to go to underwriting for final approval.
Okay, so what's your biggest no-no? Something that consumers should not do from the time they've written the contract to the time they actually get to the closing table?
Keep their spending status quo. Don't go out and start spending a bunch of money for refrigerators, washers, dryers, new carpet, what have you. Keep everything status quo. Don't change your spending habits. We'll leave it as is. Because prior to closing, you're not to the finish line yet. So prior to closing, we're going to rerun a credit report. We're going to verify employment to make sure everything is still current based on the approval.
Otherwise, you have to redo the loan, don't you?
Or it could be denied.
So Tim's advice is, after you go in serious debt with your home, then it's time to go buy that new car and the refrigerator, washer and dryer, and all of the other things that you've wanted. Hey, thanks for joining us today. Tim Brockhaus, Terry Hall with another good real estate tip.